Now, Bitcoin broke above 92.50 for the first time since February as the leading cryptocurrency continues to trade in a very tight range. It's a bit boring over the last couple of months, but as equity gets feisty, cryptocurrency markets have turned a little dull to call out crypto's next big move and more. Leigh Travers, Chief Executive of DigitalX, joins us live via Skype from Perth. Good to have you aboard on AUSBIZ. What's happening with Bitcoin at the moment and that really narrow trading range?
Yeah, Kochie, great to be here, and particularly compared to the ASX at the moment, the volatility has really dried up in the digital asset landscape. I think that's something that those in traditional investment circles have been crying out for a period of time, and here we have it. It's a low volatility point in the marketplace, and investors are actually focused on some higher yield opportunities within the digital asset landscape, which is pretty interesting right now.
Yeah, and when you look at on the equity markets, the performance of tech stocks, particularly here in Australia, it has been a wild couple of months. What are other digital assets doing?
Well, in terms of Bitcoin, it did have that dip during the March COVID period when there was that flight to liquidity. Remembering that digital assets are alternative assets, but they're also very liquid. So in times of panic, they are sold to generate cash. But that's no similar to what happened during gold and the GFC. They've quickly been bid up. I think there's been a major focus on them, really because of what's happened in the US and central banks and the currencies globally. We've had a 50% increase in the US dollar money supply. So looking at finite supply assets like Bitcoin become quite attractive. We've seen a price rise from around that 5,000 as a low up to around 9,000 as it's butting up towards 10 US. So really healthy in the terms of the Bitcoin life cycle. And then there's also quite a lot of interest in sort of staking opportunities, which are essentially the ability to use your digital assets as collateral, help secure the network and generate a yield on that, which is 3 to 4 times that of a term deposit, for example.
Okay, Bitcoin halved in May. How can that happen? And what's happened since? Just run me through it.
So the way that Bitcoin's issued into the market, we know there'll only ever be 21 million. When it started in 2009, 0 was introduced into the market. They were slowly introduced over time until around, say, 2040 is around the majority of Bitcoins being in the marketplace. So every 10 minutes, some fresh supply is added into the market. And it's not a linear distribution over time from 2009. It actually halves. That supply rate halves every 4 years. So 2012, we saw a halving, 2016, and then 2020. So that meant in May, we saw around $18 million of fresh supply hitting the market. That was halved to $9 million per day US. So quite a dramatic decrease in the supply. The 2 previous halvings, 2012 and 2016, well, the year after that was associated both times with the best 2 years in terms of price performance. So yeah, he's hoping for another strong year post the May halving.
Yep. Okay, you've sort of this whole cryptocurrency area is criticised quite strongly by traditional investors, the big ones, the Buffetts, the JP Morgans, Goldman Sachs, those sorts of groups. Largely because you don't know who's behind the cryptocurrencies. There's no regulated market and no regulator to look after it. Are you finding that as people learn more about it, more traditional investors are being involved rather than just seeing it as sort of a gamified investing?
Well, I think, exactly your point there. Traditional investors, once they understand it, they receive the education, then they can participate, and they are definitely coming around. You can see the number of institutions that's increasing, whether that's trading the CME in terms of Bitcoin futures, or whether that's participating inside of investment funds and that market growing. In terms of some of the names you mentioned, JP Morgan and Buffett's and so forth, that are major players in traditional markets. Well, first they need the education, and then secondly, they need to find a market opportunity. Buffett's the world's biggest holder of banks, So certainly it's going to be hard for him to come around. But JP Morgan, we know they were very negative. They then moved to create their own digital asset, which was a dollar denominated digital asset, so backed by dollars. And then they've also moved to start banking some of the most regulated crypto exchanges. So clearly there's a commercial opportunity available for them. They've understood it, they've taken the time to learn it. And I think when you have the biggest critics come into some of the biggest supporters, that's a sign that the market really is maturing, and that's a real positive from our perspective.
Yeah, all right, that's a good sign. Good sign. Leigh Travers, really appreciate your time. Thanks for joining us on AUSBIZ.
Thanks, Koshi. Great to be here.